The champagne flute stopped halfway to her lips when she saw me across the room. Veronica Ashford, HOA president, queen of Meadowbrook Estates, had been mid-toast at the clubhouse New Year's gala when our eyes met. The color drained from her face like water from a cracked glass. I raised my own glass toward her. Just a small gesture. Cordial. She set hers down and walked straight toward the exit. Her husband Jeffrey followed, confused, saying something I couldn't hear over the jazz quartet. Veronica didn't look back. Standing beside me, my attorney Sandra Chun allowed herself the smallest smile. Should we have warned her you'd be here? No, I said. I wanted to see her face. Because Veronica Ashford had spent 6 months trying to take my house over $347 in disputed landscaping fees. She'd filed liens, threatened foreclosure, bragged at board meetings about making an example of me. She'd called me a deadbeat in writing, on the neighborhood forum, where 1,200 residents could read it. What she didn't know, what she couldn't have known until the certified letter arrived at her address 3 days ago, was that I had just purchased the promissory note on her $1.2 million mortgage. Every dollar she owed, every clause, every acceleration trigger. It was mine now, and Veronica Ashford, who had promised to seize my home, was about to learn what actual financial leverage looked like. But I'm getting ahead of myself. This started 14 months earlier, on a Tuesday morning in October, when I found the first violation notice zip-tied to my mailbox. The envelope was HOA yellow. Inside, a single page citing Section 11.4(c) of the Meadowbrook Estates Covenants, failure to maintain decorative front yard plantings to community standards. Fine, $50, due within 10 business days. The plantings in question were 3 ornamental grasses I'd installed the previous spring. Native species, drought-resistant, recommended by the County Extension Office. I'd pulled permits. The landscaper had checked the covenants. Everything was compliant. I called the HOA office and reached Veronica directly. She was polished, pleasant, immovable. The board reviewed your plantings at last month's meeting, she said. Ornamental grasses fall below the aesthetic threshold established in our updated guidelines. What updated guidelines? Approved in August. Posted to the resident portal. I checked. The updated guidelines were a 16-page addendum buried in the portal's document archive, uploaded without announcement. The section on front yard plantings now required cultivated flowering species and specifically prohibited wild or prairie-style vegetation. My native grasses qualified as prohibited. I paid the $50. Then I replaced the grasses with azaleas that met the new standard. Cost, $340, including labor. 2 weeks later, another notice. Same yellow envelope. This time, decorative plantings installed without prior HOA landscape approval. Another $50 fine. I called again. Veronica explained that all new plantings required advanced submission of a landscape plan per Section 11.4(a). Approval timeline, 15 business days. I was correcting a violation you cited, I said. The correction should have been submitted for approval before installation, Veronica said. The covenant is clear. I read Section 11.4(a). She was technically right. I paid the second $50. Then I submitted a retroactive landscape plan for the azaleas, with photographs, species documentation, and a written explanation. The board denied it. Reason: incomplete compliance history. Third notice: failure to remedy ongoing violation. $75 this time. I dug into the covenants like I was preparing for trial. I downloaded every revision, every amendment, every board resolution posted since Meadowbrook Estates incorporated in 2006. I cross-referenced meeting minutes. I built a timeline. What I found was a pattern. Veronica Ashford had joined the board in 2019, elected president in 2020. Since then, covenant violations had increased 340%. Fines collected had doubled. And every amendment she pushed through had one thing in common. They created new categories of violations from previously acceptable behavior. The landscaping guidelines, the exterior paint pre-approval process, the mailbox uniformity standards. She was generating violations deliberately. I stopped paying. The notices escalated. $100, $150, then a lien filing notice. Total amount claimed, $347, plus administrative fees. I submitted a formal dispute through the HOA's grievance process, citing the retroactive nature of the guidelines and the lack of proper notice. Veronica denied it personally. All guidelines were duly posted and approved, she wrote. Your refusal to comply is noted. Then she posted about me. The neighborhood forum message appeared on a Thursday morning. Veronica didn't name me directly, but the address was unmistakable. Reminder to residents. Failure to pay assessed fines results in lien enforcement. The association will not hesitate to pursue foreclosure on properties with delinquent accounts. Compliance is not optional. 43 comments appeared within an hour. Most supportive of Veronica. Several suggesting the deadbeat should be forced out. I sat at my kitchen table and read every one. Then I made a phone call. Sandra Chun was a real estate attorney I'd worked with on a commercial purchase 2 years prior. Sharp, thorough, patient. When I explained the situation, she was quiet for a long moment. John, she said carefully, what exactly are you trying to accomplish here? I want to understand my options. Your option is to pay $347 and move on. What if I don't want to move on? Another pause. Then, let me see the documents. Sandra's office smelled like leather and old paper. She'd spread the HOA covenants across her conference table like a crime scene, each section flagged with color-coded tabs. They're vulnerable, she said, tapping section 11.4. The landscaping guidelines were amended without proper notice under state statute. Texas Property Code requires 30 days advance written notice to all owners before covenant amendments take effect. This was posted to a website, so the fines are invalid. Arguably, but fighting it costs more than paying it. She closed the folder. Unless you want to make a point, I want to make sure she can't do this to someone else. Sandra studied me. Veronica Ashford has been president for 4 years. Nobody's challenged her successfully. She's careful. This violation campaign, she's built it to survive legal scrutiny. Barely, but it holds. Then what do? You could file a lawsuit. Dispute the fines, challenge the amendments, ask for injunctive relief. It'll cost you $15,000 in legal fees and take 2 years. She paused. Where you could pay $347 and plant different flowers. I stared at the covenants. There's no third option? Sandra tilted her head. There's always a third option, but it requires knowing something about her that she doesn't want you to know. I went home and started looking. Public records in Texas are remarkably accessible. Property records, tax filings, court documents, most of it's searchable online. I started with Veronica's house. 4225 Stonebridge Court. Purchased in 2018 for $1.15 million. Financed through Platinum Trust Mortgage Company. Original loan amount, $920,000. I pulled the deed of trust. Standard terms. 30-year fixed rate. Monthly payment around $5,400, including taxes and insurance. Then I checked for modifications, refinances, secondary liens. Nothing unusual, until I found the missed payment. It was a small note in the county records, a substitute trustee appointed by Platinum Trust in September, for months ago. Substitute trustees get appointed when a lender is preparing foreclosure proceedings. It's the step before they accelerate the loan. Veronica Ashford had missed payments. I pulled her property tax records. 2 years current. So it wasn't a cash flow problem across the board. It was specific to the mortgage. I called Sandra. Substitute trustee appointed means they're in default, she confirmed. Probably missed 3 or 4 payments. Lenders positioning for acceleration if they don't cure. Can we find out how much they owe? Not from public records. You'd need access to the loan servicer's account. What if I contacted Platinum Trust directly? Sandra was quiet. Then, why would you contact them? To ask if the note's for sale. John, mortgage notes don't just. She stopped. Wait, are you serious? Is it possible? Technically, yes. Lenders sell distressed notes all the time, especially if the borrower's in default and they don't want to foreclose. But you need significant capital. We're talking about a loan balance probably around $850,000, maybe more if payments are behind. What if I had the capital? Sandra exhaled. Then I'd say you're either brilliant or insane. Let me make some calls. Platinum Trust Mortgage Company was a mid-sized regional lender based in Houston. Sandra reached their special assets division, the department handling distressed loans. The conversation took 3 days of back and forth. Yes, the note on 4225 Stonebridge Court was in default. For missed payments. Total arrearage, $23,600. The borrowers had been unresponsive to modification offers. Platinum Trust was preparing to accelerate. And yes, they were willing to sell the note. Purchase price, $782,000, the remaining principal balance, plus fees. The buyer would assume all rights as lender, including the right to foreclose if the borrowers didn't cure the default. Sandra laid it out for me in her office. You'd own Veronica's mortgage. You could offer modification, demand immediate payment, or foreclose. But if you're doing this for revenge, I'm doing this to make sure she understands leverage, I said. That's revenge, John. It's education. I sold stock, liquidated a CD, took a short-term bridge loan against my commercial property. Within 2 weeks, I had the capital. Sandra structured the purchase through an LLC, Clearwater Holdings, a name that meant nothing, registered to her office address. Veronica would receive notice of the assignment, but she wouldn't immediately know who owned it. The sale closed on December 18th. I became the holder of Veronica Ashford's $1.2 million mortgage on December 20th. The notice of assignment went out by certified mail on December 21st. And on December 31st, I attended the Meadowbrook Estates New Year's Gala as a guest of Sandra's, who was a resident herself. That's when Veronica saw me. She didn't approach. She left. But the next morning, my phone rang. This is Veronica Ashford. Her voice was tight, professional, barely. I received a notice that my mortgage was sold to an entity called Clearwater Holdings. I need to know who owns that company. Good morning, Veronica, I said. How was your New Year's? Silence. Clearwater Holdings is my company, I continued. As of December 20th, I hold the promissory note on your property. You're currently 4 payments behind. Total arrearage is $23,600, plus late fees and interest accruing daily. I heard her breathing. I'm calling to discuss your options, I said. You can cure the default by paying the full arrearage within 30 days. Or we can discuss a modification. I'm flexible. You can't. This is, she was stammering. Veronica Ashford, who had never stammered in her life. This is harassment. It's a legal assignment of debt. Happens every day. I'll sue you. For what? Purchasing a financial instrument from a willing lender? I'll wait. I'll let that settle. In the meantime, your 30-day cure period starts today. If you don't bring the account current, I can accelerate the full loan balance. That's $897,000, due immediately. If you can't pay, I can foreclose. You're doing this because of the HOA. I'm doing this because I'm a lender now, Veronica. And you're a borrower in default. She didn't pay. 30 days came and went. No check. No wire transfer. No communication except a single voicemail from Jeffrey, her husband, asking if we could work something out like reasonable people. I didn't return the call. On day 32, Sandra sent the acceleration notice. Formal, legal, unavoidable. The full remaining balance, $897,340.19, was now due within 15 days, per the terms of the deed of trust Veronica had signed in 2018. If she didn't pay, we would foreclose. I didn't expect her to pay. Nobody keeps $900,000 in liquid cash. What I expected was exactly what happened. Veronica called an emergency HOA board meeting. I know this because Sandra attended as a resident. She reported back that evening. Veronica tried to position it as a legal attack on the HOA itself, Sandra said. She claimed you were retaliating for legitimate enforcement actions and that your conduct was unethical. She asked the board to authorize HOA funds to help her fight the foreclosure. What did the board say? 2 members reminded her that HOA funds can't be used for personal legal disputes. Another asked why she was 4 months behind on her mortgage in the first place. Sandra smiled. It did not go well for her. The meeting ended with no action taken. Veronica was on her own. She tried one more move. A lawsuit, filed in district court, alleging I had purchased her mortgage under false pretenses and with malicious intent. She claimed intentional infliction of emotional distress, abuse of process, and sought an injunction preventing foreclosure. Sandra had been expecting it. It's a Hail Mary, she said. She's hoping a judge will pause the foreclosure while the case proceeds. But her claims are nonsense. You bought a note legally. You're enforcing it legally. There's no tort here. The judge agreed. At the preliminary hearing, he dismissed the abuse of process and emotional distress claims outright and declined to issue an injunction. Veronica's attorney, a young guy who looked increasingly uncomfortable, asked for time to amend the complaint. The judge gave him 2 weeks and set another hearing. Veronica didn't show up to the second hearing. Her attorney withdrew from the case. The lawsuit was dismissed with prejudice. That same afternoon, Jeffrey called me directly. "Mr. Hastings, this is Jeffrey Ashford. I think we need to talk." His voice carried the exhaustion of a man who'd been arguing with his spouse for weeks and losing. We met at a coffee shop in the next town over, neutral ground. Jeffrey was 52, silver-haired, an engineer at a defense contractor. Steady income, solid guy, completely unprepared for the situation his wife had created. "I didn't know about the missed payments," he said. "Veronica handles the finances. She told me everything was fine. Then your notice came, and," he rubbed his face, "we can't pay $900,000. We don't have it. Our savings are gone." "She spent it. On what?" "I don't know. She won't tell me." He looked up. "But I know why you're doing this. The HOA stuff. The fines. She told me you were just some deadbeat refusing to follow the rules, but I looked it up. I saw what she posted. I saw the violation notices." He slid a folder across the table. Inside were printouts, HOA violation notices issued to 7 other residents over the past 2 years. Amounts ranging from $200 to $1,800. 3 had resulted in liens. "She's been doing this to everyone," Jeffrey said. "Nobody fights her because she makes it expensive and humiliating. You're the first person who fought back." I closed the folder. "What do you want, Jeffrey?" "I want to save my house. And I want my wife to stop destroying people because she can." I considered him. Decent man. Wrong place, wrong partner. "Here's the deal," I said. "You cure the $23,600 arrearage within 60 days. I'll deaccelerate the loan and modify the terms to bring your payments current. You stay in the house." "And Veronica?" "She resigns from the HOA board. Immediately. She posts a public apology on the neighborhood forum for the defamatory comments. And she personally refunds every fine she's issued under the landscaping guidelines to every resident affected. I have the list." Jeffrey stared. "She'll never agree to that. Then you'll lose the house in foreclosure, and I'll bid on it at auction for 70 cents on the dollar. Your choice." He took the terms home. It took Veronica 4 days to break. The resignation letter was posted to the HOA portal on a Wednesday morning. Brief, professional, citing personal reasons. No apology in it, but that came separately. The forum post appeared that afternoon. Veronica admitted the landscaping guidelines had been applied inconsistently and that several residents had been fined inappropriately. She apologized for any distress caused and announced that all affected fines would be refunded within 30 days. It was the least sincere apology I'd ever read. But it was public, and it was permanent. Checks went out to all 7 residents on Jeffrey's list. Total refunds, for $1,200. The $23,600 arrearage was paid in 2 installments, the second one clearing on day 58. I deaccelerated the loan, modified the terms. Jeffrey and Veronica kept their house, and I kept the mortgage. 6 months later, I sold the note back to Platinum Trust at a small profit. I didn't need to hold it anymore. The point had been made. Veronica never spoke to me again. She avoided neighborhood events. The new HOA board, elected after her resignation, quietly rescinded the landscaping guidelines and issued a moratorium on new violation enforcement policies. The azaleas I'd planted grew beautifully. I still live in Meadowbrook Estates, still pay my HOA dues, still maintain my property to reasonable standards. But every time I pull into my driveway, I think about Veronica Ashford standing in that clubhouse, champagne glass frozen halfway to her lips, realizing that the person she tried to crush had just become her lender. Leverage isn't about power. It's about understanding exactly where someone else is vulnerable and having the patience to wait for the right moment. Veronica taught me that. I just taught it back.